afternoon, everybody. Welcome to the Trader Merlin Show. It is your Friday edition, the weekend edition, our wrap-up to all things that were market-related today. I noticed that I made a gratuitous mistake on my graphic for today's show. We'll have to fix that one another time. The date is the 7th of July today, and I put over here that it was I just didn't update the date on this one. That's what happens when I get moving too fast. Anyway, welcome everybody. I see we got people from all over. I am in sunny Southern California, so hello to Thomasina, it's Alabama, right? I forget, the other Alabama, I think it's Alabama, not Arkansas. I see we got Ricardo, we got Skilled Stocksman, Fort Worth, Texas for Options Monster, Katut from New York, AT from Utah, Tom from Southern California, Futures Trader, Big Ed from Southern California as well. I got Daryl and Atlanta. Hot Atlanta today, or is it cold Atlanta? Alan, Texas for Gary. We got Tibor, Jimmy T as well. Anyway, running through where everybody's from on this Friday afternoon. A short week. I mentioned this in the Monday Morning Must Knows for Online Trading Academy. I said, typically these holiday weeks, especially when you have a half day, the volume just gets really, really low. And when you have low volume, the volatility is much higher because you have fewer participants. And we had a pretty volatile week this week. So let me start things off there. I'll run through our Arkansas, the one that doesn't touch the coastline. All right. Let's run through our top 8 markets, work our way from the bottom to the top. I got a great question came in about real estate as well, so I will dive into that one. But let me sort things from top to bottom, and we'll work from the bottom up to the top. The catalyst for a lot of today's action was that dollar index, which is down 0.82%. Still at 102, and again, this chart hasn't really changed, right? We've kind of looked at this as waves, which is why I chose this graphic. I feel like there's been some nice waves in the market. You notice that I've got these waves in the background and kind of looking red for negative for the week. But that dollar index is still just kind of respecting this compressing zone. It's getting tighter and tighter and tighter. Now all of a sudden I find myself looking at this 102 mark and saying, we get to close below 102. I might become more bearish, but there is no decisive direction that this dollar index is going. However, today we saw a fairly sharp decline of about 0.82%, and that in turn acted as a catalyst for the markets for a majority of the day. As you guys know, there was a nice start to the day, and all of a sudden, like the bottom just fell out of it, and markets gave back almost all their gains, except for the Russell. All right, let's move up here. We got Bitcoin, which is down 0.38%. Technically, nothing really surprising here. It's, again, as long as it doesn't close below that kind of gray line, which isn't even an official line, by the way, guys. I just kind of arbitrarily threw it there. It looks to me like it should hold here. It would probably be more appropriate just to put a horizontal line. I'm more of a believer that those become more relevant. So let me just do that to modify this chart. And I'm going to go to these lows right here, and that will be the line that I'm kind of hanging my hat on, which is 29,740. Right, looking for that to act as a demand here and hold prices up. Otherwise, we could see some good profit taking on Bitcoin. But all in all, I still feel okay, even though we saw down 0.38% today. And overall, for the week, a fairly negative week as well. All right, looking at the NASDAQ, down 0.3%. What's noteworthy from this one is the long topping tail today and almost no bottoming tail. This is psychologically a very bad thing. Why? Well, because it means that momentum was great at one point. We had all green across the board for the major market indexes, and then just gave it all back in closing right near the session lows. Here's your 5-minute chart of that just to paint a different picture. Notice how great it was, looking fantastic midday. And then all of a sudden, midday doldrums hit, and boom, bottom fell out of it, gave back 100% of those gains, and actually ended negative on the day. So a heck of a day for anybody who was doing active day trading. I was not a part of this at all, unfortunately. Just doing too many other things to be an active day trader much these days. But if you are day trading, man, you had some great opportunities. And by the way, nobody called me out for slacking here a little bit. Didn't give you guys a cheers. Cheers, happy Friday. I guess my liver has been telling me don't drink on the Friday show because the weekend was a pretty fun one. But anyway, cheers to everybody out there. I'm drinking Frey Ranch from Nevada. They got all kinds of crazy stuff in Nevada, and apparently they make pretty darn good whiskey. This is the rye, by the way. I'm going to get the bourbon here soon, but thank you very much. Have a great weekend. Josh, good to see you, Josh. Hope all is well. I got John from Arvada, Colorado. I don't think I've ever heard of Arvada. We got Florida in the house, rainy Atlanta. All right, cool. So let me keep going up the list, and I'll get to the questions as they roll through here. That NQ, again, just a great chart. Same thing happened for the S&P 500, just an abrupt about face there. And we'll look at the economic data in just a minute, which may have been the catalyst for some of this. But I'm going to keep it on the daily here so we can kind of see what happened for the week. There's your daily on it. Notice the overhead supply zone we've had mapped out for quite some time, right near the bottom of that zone that we were stuck in for the better part of this week. So interesting to see what happens with the S&P going forward. Again, I do think you're going to see a retracement down to about 43.67 on the S&P before we see any real definitive action as to where that's going to go forward. So feels like we got a double top on the S&P pulling back, and you notice that NASDAQ has a very similar picture. Now, just because it's technically looks like it's forming a double top typically means that it reverses and goes the other way. It would have to break this 14,852 on the NASDAQ for me to say it's officially a double top, right? You got to have the double top for the follow through. And good to see a Mike from Wisconsin. A friend of mine was from Oconomowoc. I was like, that's such a strange name. I love the Indian names up there in Wisconsin. Oconomowoc. All right, we did the S&P, we did the NASDAQ. Let's look at gold. My silver position doing great today. Love that. That has certainly helped out the weekly rate of return for myself. But notice the gold chart here. Holding and just kind of sticking near that lower end or in that demand zone. Now, I'm not a huge fan of this because the longer that it sits there, the more likely it's going to chomp and eat up some of that demand that's sitting in that yellow box you guys see on your screen in between the prices of 1921 and 1890. So you got about a 30-point range right there, and we just bounced out of it, which is great. That's good, but I just don't feel like the momentum is there. I really thought we'd see a stronger move. Haven't had it, and the longer that it doesn't have an aggressive move up, the more likely I think gold's going to continue to drift down. So while it's nice today, a 0.84%, overall for the week it was positive as well, but just not liking the fact that it can't seem to move. It feels like it's just a holding pattern right here, which is great. I'll bring up SLV so you guys can see that one as well. For the week, silver was one of the few markets that was actually up. Closing today up 1.68% to 21.18. I want it to close. I believe my calls were at 22, so I want to see it close at 21.99 on the 17th. So we'll see if that happens. Moving on up, here's your 10-year. Now the 10-year, let's see, how many days in a row? We got 1, 2, 3, 4, 5, 6, 7 days in a row of up move for the 10-year. That is good on one hand because it could even out that yield curve. On the other hand, it's not great, especially for anybody dealing with real estate. And I had a question, which I will get to here shortly on that. But the yield increased 9.82% this week. That is not good for the housing market, right? The higher that gets, the more likely it'll price people out of the market and put pressure on people in that regard. So we'll look at this in a second when I get to the viewer question. But that is your bronze medal winner for the day. The 10-year bond up 0.87% on its yield to 4.07. Podium time. We do have an index in there. Good news. It's the Russell 2009. Still sticking with the Tom Barr box, as he mentioned. He says that the Russell did exactly what I needed. It let me out of an 1820 iron fly yesterday and a 1910 today, a week before expiration. Love it. Right? You gotta love when those machines keep on paying. It's all right. This is a total tangent. I know I'm going tangent. It's the whiskey speaking, but there's certain videos that I find on YouTube or people that I follow that, how do I say this? It's almost like you live vicariously through their misery. So there's a guy, you don't need to follow this guy, but his name is, I think it's Vegas Mike. I think he's on YouTube or Twitter. He's got some social media handle that I follow. I forget where it is. It might be on Facebook, but his name is Vegas Mike. And this guy, what he does is he'll drop $3,000 into a slot machine and he records it and he just plays those slot machines. And in your mind, I keep thinking, this guy has this channel because he must be killing it. He must be making so much money. So you're drawn into watching these videos. I don't know if anybody's ever heard of this guy, but it cracks me up because everybody in here knows. And if you don't know this, you need to know this. The longer that you play any machine in a Vegas casino, an Atlantic City casino, in any casino in any part of the world, the longer you play those, the increased probability of you losing all of your money. They are mathematically programmed to cause you to lose money. You just know that. So my rationale is if you know that, why would you sit down and play a slot machine? They're addictive. They're fun. All the blinking lights. Let's line up the 3 buffaloes and get the stampede. Let's have the spin the wheel of fortune. Yay! Anyway, this guy has this video that he posts almost every single day, and I have watched this guy probably lose over $100,000, and he's maybe won maybe 3 times. And the funny part is, he'll post the video where he actually makes money, and he'll make like $2,000, but that looks great by itself. But when you go back and watch the entire video, he's already down 12. And he's like, yeah, I made 2. It's like, yeah, but you're down net 10, dummy. Anyway, the reason I bring that up is I feel like what Tom's strategy here, many people would look at it as gambling, and it's not. See, the guy that I just mentioned, Vegas Mike, is gambling. The computer is programmed against him. And what Tom does, and a lot of spread traders and guys that are doing iron condors and flies, etc., is you're really just stacking probability in your favor, right? You're setting yourself up in a position where, okay, I'm using all the probability that's based off the price chart, that's based off the options chain, implied volatility, and you're putting those odds in your favor. And I would lean to the side of you have a greater than 50-50 chance, whereas in Vegas you don't. Vegas, I think the best odds you can get are 49% in your favor. So I like this way better than any casino game. It may seem like gambling to a lot of people that don't know trading, right? When you talk to normal people, you say, oh, I'm a trader. Like, oh, you're a gambler. Well, no, I'm a speculator at heart. And if I am a gambler, I want to put myself in the position of I'm the house. I'm setting the odds and putting them in my favor by having good risk management, having a plan, having a strategy, right? And reviewing all those things. So good for you, Tom. Glad that one worked out. It makes for a great Friday. So cheers to you on that one. Love it when a stock has good volatility this week, or an ETF, like the Russell. But all in all, there you go. And Tom says, here's his factors. ATR, expected move, zone, sigma, etc. Right? But you have your conditions, right? This guy that plays the slot machines, he looks at it and goes, oh, I love Wheel of Fortune game. Clink, and there goes another $3,000. That's just stupid. This is a totally different ball game, right? I don't understand how people want to go to Vegas when they know that the odds are against them. Although I will say I've done pretty well playing blackjack over the years, but that's the only game I play. And it goes back to I have a plan, I have a strategy, I have all the things I know that work for me. And when it doesn't work, I got stop losses and I move on. I know I hate it when my colleagues think I gamble. I know, drives me nuts. And I just kind of smile and go, okay. And honestly, Thomasina says, I hate it when my colleagues think I gamble. I'm sure there are times when we gamble. And I say we collectively, everybody here has that moment where you go, yeah, you know what? I'm going to take this trade anyway. Okay, that might be a gamble. But at least, at a bare minimum, you're using probability in your favor. Just like for me, when I play blackjack, right? Let's say I've got a 14. So I've got a 14 and the dealer's got a 10. Are you supposed to hit? Well, if you look at basic numbers, right? I have a 14, dealer has a 10. So I assume the dealer's got 20. So I'm going to lose. Does hitting work in my favor? Well, if I've got a 14 and I'm trying to get 21, that means I need 7. 7, 6, 5, 4, 3, 2, or an ace. I need one of 7 cards. And there's 13 cards of each suit. So if there's 13 cards and I need one of 7 of those, then I actually have over a 50% chance of getting the card that I need based off of just basic probability, right? Does that make sense, everybody? So when I'm playing, I am gambling in an essence, but I'm using the probability, and I know hitting that 14 is not the best decision in the world, but I have to because the dealer's got a 20, and I also know that the odds are better of me getting the card that I need versus getting one that could bust me, because an 8 would bust me, 9, 10, jack, queen, king. Right? So I've got 6 cards that bust me, 7 that win for me. Odds are in my favor. Very, very simple. Big Eb says, play craps for the best odds. Correct. The challenge there, Big Eb, is the complexity of it, right? With craps, there's so many different variables, there's so many different plays and side bets that if you don't know those, then you are gambling, right? You've got to know those combinations and the probabilities with each one, which if you're a math geek or you're a real math person, craps is the best way to go, but I like looking at blackjack's just simple for me. I got 1 of 13 cards, right? There's 13 cards of each suit. Makes it very simple. And if I notice that a whole bunch of low cards have come out, then I know that probability has shifted and I may not hit. Anyway, not gambling, moving the odds in your favor. Correct. But people lump it all together. That's why I like to call what I do, and I think what many of you guys are doing, is speculation. You're speculating. Tom was speculating that the Russell would stay within this range. He wasn't gambling on that. He was speculating, and his speculation came through. Why? Because he's using all those factors. Anyway, Long-winded tangent there, Tom. Thanks for giving me that one. I think was a worthy side discussion. All right, let's go back to our chart here and get to number one. I'm kind of bummed I didn't sell more XLE puts because we had a huge move up in oil today. 2.87%. 73.86 is where we finished at. Again, I still like this upper blue line we have at $75.17. That to me will become the next most logical target for crude oil going forward. All in all, I mentioned that I had sold XLF puts last week. There we go. And XLE, not XLF, XLE. And I forgot my strike price. I think I'm at 76.50. So I'm way down here. 76.50 was my strike. And of course, today's action on that just took out tons of that premium. So I get to collect a lot of the premium. I thought about maybe closing it early and just being done with it. But nice move out there in XLE today. I also have puts on Tesla, which I will just show you here. Today down a little bit, but I believe I'm at 260 as well. I'm kind of targeting closing that gap, which would be a logical point for me to want to buy back into this. I'm pretty sure 260 is my strike. I can't remember off the top of my head. I guess just for transparency purposes, I'll look at my account here real quick and just tell you exactly that strike price because I know that people want to know, and I hate when I can't remember my strike prices. Let me just get this one in here for you. Let's go back to that page. Hold on 1 second. So my strike on this one for the Tesla, 240s. Oh, way better than I thought. I thought I did where the gap closed, but I think I just didn't want to take as much risk. So I'm actually there at 240. Which would be a bigger, deeper pullback in there. Great, I'm fine with that. My strike, just in case you guys want to know, on XLE is 76.50. There's your XLE, and I already mentioned 76.50 be my strike. And that's, I've got my Coinbase puts, which are going to expire worthless on the 21st. Here's Coinbase. Those are the biggest positions I have open in this account. So there you go. Just sharing that with you. All right. What is the expiration? The 21st. 21st expiration. So I'll put a little vertical line on that one. Let me just go to. So the 21st is. I typically do the monthlies. There's just the most volume on the monthlies. So I got plenty of time. Let's go TSLA. And yes, I do know that the earnings come out. I know Big Ed's going to say, don't you know the earnings come out? I do know that. So I will probably exit that one before. Right, so you notice where the vertical red line is, that's expiration. You can see here at the bottom, earnings are on the not on Friday the 21st. They're on Wednesday. So earnings come out Wednesday the 19th. I will probably exit on Tuesday. I just don't really feel comfortable holding Tesla into earnings. I mean, even though I'm so far out of the money, right? It's trading right now at 274. Let's assume the earnings was tomorrow. I still don't know if I would be comfortable with those puts. Actually, if it was tomorrow, I might be. But we might see some down move next week in this one. I do think it's going to go down. A little bit of a pullback here, even though some of the EV stocks today, guys, soaring. I don't know if anybody saw Rivian. Holy shnikes. That show we did last week? I can't even remember. We do so many shows for you guys. I think we're up to 170 shows I've done this year alone. 118 shows I've done this year alone. So we're getting up there. Anyway, Rivian ripping today. Let's look at RIVN. This has been a phenomenal couple of weeks for Rivian. Like, wow. I mentioned that they had their struggles, and I didn't put it as one of my top 4 that I was looking to buy, but 85% gain in the last 7 trading sessions for Rivian. Then you click, not a shabby week. Do I trade event contracts in the futures market, such as trading area predictions on whether the market will close above a certain price? No, I don't. When I'm trading the futures markets, it's just supply, demand, or price patterns, and say, okay, I'm going to go directionally here. I want the leverage of futures markets, so I'll take that direction. Lately, because I haven't had as much time to sit there and be in front of the screen all day like I love to do, I'm doing too many other things right now. I'm kind of spreading myself a little bit too thin, but I've got some things in the works, which maybe we'll discuss here in the near future. The options is just the easiest way for me. I'll look at something and say, well, I think it's going to go down, but I'd like to buy at this price and put premium, even though it's not hitting grand slams. It's just consistent. And occasionally I get caught, like I did with FRC. But overall, it's a strategy that's been working for me for quite some time. So I'm sticking with that until I can actually get back into full-time, short-term stuff, which is where I really love to do. Let's see. No thumbs up for Friday. Nobody loves the show today, hey VP. No one loves the show today. Let's see. Let me go back out there. So we ran through our top 8 markets. we did talk about the 10-year, which brings me to one of the few questions. And by the way, I do have the email up here, which is TraderMerlin@gmail.com. I've been asking you guys for suggestions about show topics that you like. I got like 4 topics yesterday, which is great. So keep them coming. If you have certain things you want me to discuss in this program, I'll do my best. As I hope you guys appreciate. In many cases, it involves a lot of research to get graphics and build graphic support and do all that stuff. And I'm starting to run short on time to get as good a graphics as I can for this program. So I apologize for that, but I only got so many things I can do in a day, and we do what we can. Tim Blotzer always said, safe and secure. Yep, fast nickel, not slow dimes. I agree. I definitely, that's why one of the mantras I liked him, fast nickels, don't go for the slow dimes. You know, if you can get something right away, go for it, and then just try to do it all again, right? Would you rather have 4 fast nickels or 1 slow dime? Well, if you do the 4 fast nickels, then you're looking at 20 cents versus 10. So yeah, it's definitely a theory that makes sense. What I think is important about that one, it's a good point you bring that up, Believable, is it has to fit your personality, right? If you're not fast, if you can't think real quick on your feet and be able to make decisions like this and snap your fingers, make a decision, then those fast nickels might not be appropriate for you, right? I've learned that your trading style will adapt to your personality style. So if you're someone who's really kind of slow and methodical and takes your time with everything, then going for those fast nickels probably is not going to work, right? You can't force yourself to do another style. So I think that you find out what your strengths and weaknesses are. You find out your personality and your temperament for sure. And then you start to craft your style to that. This has been a challenge I've had for years because, as you guys have noticed, I talk fast. Most of the things I do fast. I've got no butt because I walk fast. I try to do things quickly. So my trading style, I do better short term. If I went to try to do long-term investing like Larry Jacobson does, it doesn't work for me. I don't have the patience to sit there and hold a position for a year or 2. Now, I might be able to go a few months. That's okay. But I can't hold something for 2, 3, 4 years. The only thing I'm holding that long is real estate. That's it. So, find out where your strengths and weaknesses are and then build your style around that. When I used to teach the Pro Trader for Online Trading Academy, so many people were like, hey, I want to do your style of trading. And there were a couple times I'd say, I don't mean this in the mean way, but it's not going to work for you. I've watched how you trade. I've watched how you analyze the markets and how you put your orders in. You're just slow. And you have to be faster than that to do short-term stuff. Anyway, keep an eye on that one for all of you who are still discovering who you are as a trader. Just look at the way you do things in your personal life. If you're slow and methodical, probably don't want to start a day trading. At a minimum, go to swing trading, a couple days, couple weeks, or maybe even long-term investing, and then start to build from there. Got to bring back the old band, John and TJ, so you can work on those graphs. Yeah, I wish. TJ. TJ, I don't know exactly sure where TJ is now. He was doing, I think he was doing video production for church and different groups. So cheers to TJ. Sometimes he creeps in here and watches from the sideline. So cheers to TJ. And we'll get John on the program every now and again. Let me see. I got a whole bunch of questions that came through. That Rivian is running out, but that reversal what I'm waiting for. I have not seen Rivian cars in LA driven. Oh, really, Oliver? They're everywhere here. I'm seeing so many more. I saw 3 of them today. I went to lunch with Larry Jacobson and saw 3. So one in the parking lot, one down the street, and then another one was driving past me. So starting to see a lot more of them. I like them. If you haven't seen the Rivian, right behind the cab of the truck, there's it's like this big. It's like I don't know, say maybe 10 or 12 inch kind of square panel, and it pops out and slides out, and it's a luggage storage compartment. But one of the options you can get, it slides out and a leg drops down, and you have a full kitchen. It's got a stove, it's got a refrigerator, it's got a dish, a sink, wash, all the utensils, all in that little sliding compartment like that. Now that's cool. How often am I going to use it? I don't know, but it's damn cool. Let's see, what else we got? Walked into a Polestar store today, just curious, nice cars. Wow, where was that, Big Eb? Was that in obviously San Diego, you're down there. I might have to check that one out. They looked cool, but I got to be honest, I can't spend that kind of money. What's a Polestar going for? 130, 140? I'd rather spend 40 on a loaded Toyota Tundra. Go 50,000 for a loaded Toyota Tundra, and spend the other $80,000 on life, travel, investments, and that sort of thing. It's tough. It's tough. Oh, cool. Excellent. Yeah, it's funny. I was trying to get TJ to do more. He was a master with the TriCaster, which is a video switching system. He's really good with it, but he just kind of didn't want to do it. I was trying to get him a job with NFL. Like, dude, go work in the NFL doing TriCaster switching. Anyway, let's go to the question from viewers. Sorry, I'm digressing. It's the whiskey talking. It's Friday. I'm just happy. I hope you all are too. Marcia says, if you're looking to buy a house, would now be a good time or wait? This is a great question. It's really difficult because there's a question you got to ask yourself first, Marcia. And I know many people here own their homes. I know some of you are actually looking potentially to buy homes. The question I would say first off is, what's your goal with this house? Is it to buy this house, flip it, make an investment real quick and make some money? Is it your forever home that you're going to buy and live in and just stay there forever? If it's a home that you're looking to buy, live in, and stay forever, then any time I'd say is a good time. You buy it when you're comfortable, but you got to look at the numbers and say, is it going to eat up all my investments, right? Am I going to put all my money into this home? Then that's risky. If I put enough in there for the down payment and I can afford the mortgage, and if I lose my job, I can pay that mortgage for, let's say, another 6 months, then okay. But if you're really stretching yourself to buy a home and you're going too thin, don't recommend it. So let's look at a couple different factors here, which I wanted to look at just to drive home the point. If you're looking at buying a home, it's starting to become better. So this is the data, which is called the S&P Case-Shiller Composite 20 Home Price Index. I know that was a mouthful. Say that 3 times fast. That's a tough one to do. This is their year over year. So what you're looking at right now is literally the last year, for the last 12 months, home prices have fallen on average in those 20 major metropolitan areas of the United States. They have fallen about 1.7%. And we're seeing the trend is clear that they're getting lower and lower. So what you'll start to see here shortly, I think, is home prices falling even farther, which may present a value buy, right? Where you look at a home and you say, it's cheap relative to what it was 3 months, 6 months, maybe a year ago. So you could be buying a home that you like at a cheaper price. With that regards, I would say, then maybe now is a better time to buy. Maybe not the best, but it's like picking a bottom. Where is that housing market going to bottom? We don't know. My gut tells me that we're going to see this chart continue to slide even lower. Now, does it get as bad as we saw in 2008, where it goes to year-over-year home prices falling 19%? Probably not. But, do we get to maybe negative 5%? So I would say, Marcia, I think you have maybe wait a few months to see if this number continues to decline. Again, it really depends on where you live. Each major metropolitan area is going to have slightly different, market dynamics. So good news for you if you're looking to buy is that prices have been declining. The bad news for you is that unless you come in there with all cash, you're going to have to get a mortgage. And here is the chart of the 30-year fixed rate mortgage. This is the average that's put out by the Federal Reserve. And you can see historically, they've been going down and down and down and down. But let's zoom in to the most recent price action. So this goes back, let me zoom in a little bit more. This goes back to 2011. So I've got 12 years worth of the 10-year on this. And we bottomed out in 2021, right? That low was about 2.67. That's the average for the U.S. What's noteworthy here, and I think very important to identify, is this pattern is a bull flag. This is an uptrend. It's actually forming what looks like a cup and handle pattern right now, or an ascending triangle. It looks like it's going higher. Now, we were above 7% back in November of 2022, right? We were at 7.08. Right now, we are at 6.81% as the national average in the United States. This looks to me like it is going higher. It's just basic technical analysis. Forget everything else about the markets. That price chart there would tell me that the yields are getting higher and higher and higher. Remember, we also have an inverted yield curve. Let me bring that one up for you guys, which I know you guys know well. Here is your inverted yield curve. Now, the good news is that 10-year surged over the past few days, which is now starting to maybe bring it back to a normal yield curve, but we got a long way to go. That yield curve is still inverted significantly. Anything below this green line up here is inverted, and it's getting deeper and deeper because the Fed is raising that short end of the yield curve by adjusting the Fed funds rate, and that is impacting all these markets. So it's still not the best time, but I think that you're going to see the yield on the 10-year go up even more. The more that happens, the more that this 10-year surges, here's the 10-year, the more likely housing prices are going to fall because less people will be qualifying for loans, and you'll see that Case-Shiller composite number decline even more. So my gut would say if you are going to be living in that home for a long time, then now is actually probably a decent time to buy. I know I'm going to get some haters for that comment right now, but here's why. if you buy now, you're buying a price that's declined a little bit over the last 12 months. But you're also going to lock in on a mortgage rate that's cheaper than what it might be in 6 months or a year, right? We're pretty sure now by the Fed funds futures they're going to raise 25 basis points. I still think they should stay where they're at, but I don't make the rules. If they do raise, then you'll see those yields get over 1%, right? If they raise 25 basis points or 1%, get over 7% for the 30-year fixed rate mortgage. And if that does continue, then we'll see it go even higher and higher and higher. What's great about that is at a certain point in time, you can refinance at a lower rate, but you got to lock in now. Right? You got to lock in at this rate before it gets much higher. So it's a tricky conversation, and there is no clear-cut answer. If you're looking to buy a house, would you wait? Would now be a good time or wait? If I have to look at myself and say, what would I look to do? I personally, since I have a home, I would wait. I would wait for the markets to crash, and I think that I don't know if necessarily going to crash, but I wait for markets to decline even more. And if the markets do decline more, that will create better buying opportunities. The only problem is if the housing market crashes, yields might get much higher. We don't know exactly how that's all going to work, but you can refinance over time when rates do drop back down. So I would say that's my take on it, Marsha. What do you guys think? Would you buy a home right now or would you wait? You guys type in. We got a few people here today. Would you buy a home right now or wait? I know I'm going to drink whiskey right now and not wait. So let's take that one. Oh, man. Big funny story for you while I wait for you guys to type in whether you would buy now or wait. He said it's at the UTC Mall in La Jolla. Years ago, I went to go see Fish in San Diego, and I was driving through, and I went to a gas station. We had a room booked in La Jolla, and I'd never been down there before. So I'm driving through, and I pulled to a gas station, and I'm like, hey, do you know how to get to La Jolla? And the guy just starts laughing at me. I'm like, if you read it, it's spelled La Jolla. And he's like, it's La Jolla. And I'm like, oh, I feel so stupid. Anyway, there you go. But is refinancing really worth it when your initial 5 years are nearly interest? Yes, if you can get your yield down. So let's say you locked in right now at 6.8%, but let's say in 3 or 4 years you can refinance and get 3%. It's worth it. If you got another 25 years on your mortgage and you're now paying 3% less, that's going to be tens of thousands, if not, tens of thousands of dollars of savings over time. Options merchant depends on price. Buy if I had to, but I don't need to. There you go. California says wait. We got most people here saying wait, and I think that's probably the prudent thing to do is wait just to see what happens. I've been looking at some properties here recently, some really attractive ones as well. And I'm like, I just gotta wait. Even though I want this property so bad, I really love this one property, but I gotta wait. It doesn't make sense right now for me to. It's a want, not a need. Cruz says, wait, if rates continue to go higher, that will eventually put more downward pressure on the home prices and overall economy. Agreed. All right, let's look at the economic data that happened today, just so we can run through that because it was interesting. And this is why I don't trust government at all. So let's go look at the ADP non-farm employment change from yesterday, right? This is the ADP, which is different. This is from a company called Automated Data Processing, which is not government driven. Their numbers were a massive increase in non-farm employment change. We went from 267,000 to 497,000, an increase of 230,000 jobs. That's great. And then you get the same number, but done by the Bureau of Labor Statistics, the BLS. I think this should just take the L out, just called BS, because non-farm employment change went from 306,000 to 209, the opposite direction. Like, wait a minute. You're both reporting non-farm employment change. How are you so vastly different? And, it just goes to my lack of trust of government, maybe painting a little more negative picture for the markets so they can keep their aggressive increases going for rates. I don't know, but that just seems strange to have such a huge difference. Based off that initial ADP non-farm employment change from yesterday, I was actually expecting the unemployment rate today to be right around 3.5. I thought we'd actually see it drop even more, but we did drop. We went from 3.7 to 3.6. All in all, historic levels. We are at levels that are fantastic. We haven't seen those since, they were back there in 2019. But I'm bringing this chart up here just to show you over time, even going back in the year 2000, we were not this low. In 2000, in the roaring 2000s, we were still at 3.8. So this is higher or better than we've been in a very, very long period of time. But your home value will be worth more. 1 second here. More, making interest rates lower. Oop, let me get that out of the way. Sorry, Jeremy. I'll call you right back. I'm doing the show right now. Gotta love live calls. Anyway, we'll go right back. That is the conundrum I always run with. Let's see. But your home value will be worth more making interest rates lower. Theoretically, but maybe not more. Remember, we're seeing the prices fall right now. So I'd rather, if I could, in a perfect world, I'd like to buy my house cheap. So I was very fortunate with this home. I got it at the lows of 2009. So very, very lucky. It wasn't skill. It was luck. I waited and waited, found the right property. But at the time when I purchased, my mortgage was like 6.5%. But a couple years down the road, refinance at a much lower rate. I'm still getting the price I wanted, and now I'm getting the mortgage that I wanted. It's harder to get the price that you want than the mortgage you want. Mortgage prices will fluctuate over time. So do home prices. But to get as much of a decline in home prices as I did in 2009, that doesn't happen too often. So I got really lucky there. Tom says the government expert should check with the Social Security tax collectors to get a better clue on employment. I don't trust any of them. I don't trust Social Security. I don't trust government. The more I do this, the more I just shake my head and go, I like looking at the data, but I don't trust that data because I know the markets are driven by that data. The best time to buy real estate is 5 years ago. Best time to buy real estate was 14 years ago. Buying in 2009 was epic. All right. Get your emergency fund in place and go for it. Make sure you have an emergency fund. For anybody who's looking to buy, you should always understand, are you stretching yourself too thin to get this house? If you are, then don't buy it. We all look at, every single one of us can go through the MLS book and look at, Zillow or Redfin and go, oh, this is my dream home. And you just know that you'd be stretching yourself too thin. Don't do it. Don't do it. Refile if you're staying put for a while. Correct. Absolutely. And I went to a 15-year just because I wanted to pay it off sooner. So I'm pleased with that choice. I love ADP and retired from ADP after 25 years. I was involved with, compiling unemployment stats, fun stuff. Michael, we got to interview you, man. We got to get you on here and talk about the compiling of data. Which would you, see, you're biased, because I would say, which would you trust more? Would you trust ADP's non-farm employment change, or would you trust the Bureau of Labor Statistics non-farm employment change, right? I would personally be leaning to ADP. Although, as we saw with Moody's during the housing crisis, they are being influenced and swayed by money. So maybe they're being paid by other institutions to say rosy things about the economy to get more people to buy in. Who knows? All I know is my trades are planned out. I like to look at this data. I love sharing it with you guys. I like talking about it, but I don't trust a lot of the data we talk about. I don't trust, the unemployment numbers, GDP, CPI, ADI, all that stuff. And it's like, Believable direction. Dave Ramsey, eFund. First off, I'm coming for you, Dave Ramsey. I'm gunning for that guy. I think he does some good, but he does a lot of harm as well. I think some of the things he teaches are very, very, very wrong. Yes, everybody should have an emergency fund. And even if it's not just sitting in savings, you should buy, a 3-month CD and just lock up some capital there, earn some yield on it. But know you've got this cash in case the doo-doo hits the fan, which no one ever wants it to happen. Sometimes it comes out of nowhere. And if it does, at least you got some money saved and it's in something rather liquid you can get your money out of. Maybe even do monthly CDs just in case, but have, let's say 3 to 6 months worth of living expenses. If you don't know what your living expenses are, get a budget calculator and you should know within a couple $100 how much you need per month to live your current way, and then maybe what you can cut out. Yeah, most of you guys saying ADP over government. Maybe that's why we all get along so well, as I've got so many people who have a disdain for government to follow this program. All right, let me go to the market data for Monday. Let me close this one out, and then we'll wrap up because I am going to start my weekend early today. So let me go to the calendar here. I will bring up what's happening for Monday the 10th. Oh my goodness. OC Fair starts next weekend. Good. That's going to be a fun one. Here's your stuff happening for Monday. You don't see any major stuff for the U.S., although you do have member Barr speaking now that he's kind of rising in the ranks at the FOMC. That could be an important one. That's at 7 a.m. So 30 minutes into the trading session. You also have Bank of England Bailey will be speaking. You have German Bubba President Nagel is speaking. That's important. So a lot of major central bank people speaking on Monday morning. As far as data, though, final wholesale inventories, you've got consumer credit, and that's pretty much it for the U.S. markets. As far as earnings go, you have on Monday, you've got WD-40. And why is that important? Well, it's important because you have the kickoff to earnings season. And it's also lubing up the week. Oh, I made fun of that one. But WD-40 is reporting earnings on Monday, and that's it. Really, the fireworks start next Friday. So I think you'll get a relatively calm Monday, Tuesday, Wednesday. Thursday, a few big names are reporting like Delta Airlines, and I can't think of all of them off the top of my head. But Friday is the day. Expect some excitement on next Friday. But Monday should be rather quiet. It's our first full trading week back from the 4th of July holiday, so it should be a good time. All right, that's going to do it for me. I'm going to wrap things up. I'm going to go and I've almost finished this one, so I'll finish the glass of whiskey and go enjoy my weekend. I hope you guys do the same. If there's topics or things that you want to see on the program, if you got somebody in the trading world you think might be interesting to talk to, you can email me or email them and tell them to email me. I'll bring them on the show as long as they're not scumbags like the trader out of Chicago who you know I can't stand, who is an absolute POS. Like learning more from different people, different traders, different industries as well. So I'm always happy to talk about different things. You can email me at TraderMerlin@gmail.com or go to YouTube. Put your comments down below any of the videos that I see many of you have done. Let's see. Michael wouldn't have made it 25 years with ADP if his estimates were as bad as the experts. Yeah, yes, I agree with you, Tom. You're right. Get Michael on the show. All right, Michael, want to come on the program? Let me know. Big Eb says you can get 13-week T-bills paying 5.25% with no state tax. That's great, right? 13 weeks, you got to understand you're going to lock up your capital for that long, but that's not that long. But great way to earn yield on it and get close to beating inflation. Maybe Woody should come on and discuss the year. No. If you guys knew the whole story behind that issue, you would all have a raving hatred of that man. Unbelievable, but I can't, for legal reasons, go into depth on that one. There's just some people who are just scummy people, really scummy, slimy, sleazy, horrible people that get away with pulling their shenanigans for year after year after year, and it just blows my mind. Absolutely blows my mind. Why didn't the Dave Ramsey? Oh, we didn't do the Dave Ramsey Kool-Aid, but it helped us pay off loans. Correct. Here's the big issue. The biggest issue I have with Dave Ramsey. I think he does a lot of good stuff as to helping you understand how to shape your finances and budget, right? Budgeting is such a key important thing. But there's one thing that he says, and I could not disagree more. Dave Ramsey has pictures of scissors cutting credit cards. No way. Absolutely not. Do not cut your credit card. Do not get rid of your credit cards. Just learn how much money you're spending every month and never use more than that in a credit card and pay your credit card off in full every month. Automatically pay it. You're building your credit history that way. You're getting points and free miles and all kinds of free perks by using your credit card. You should use your credit card for every single thing that you do on a daily basis. Everything. Collect those points. Just pay it off in full. The reason he says don't use credit cards is because most people don't have the discipline to pay it off in full, and they start to carry a balance. That's the kiss of death. Dave Ramsey hates crypto. Well, crypto hates Dave Ramsey. I think part of it is he doesn't understand it. And there's a lot of scams in crypto, which you got to be aware of. But the credit card thing is the one that I really think Dave Ramsey's making a big mistake on. Anyway, that's going to do it for me. I got to wrap things up here. Hope you guys all enjoyed today's show. If you did, give me a thumbs up. Share it with someone. Have a great weekend. Do something fun. Cheers to all of you. May all your trades be green. I will see you all on Monday. Take care, everybody.